Okay, I think we'll start now. Welcome everyone. Welcome to the seventh Marjorie Dean Lecture. We're pleased that so many people could join us. I'm Stephen Solomon, Marjorie Dean Professor and Director of the Arthur L. Carter Journalism Institute at New York University. Our thanks go today to the Marjorie Dean Financial Journalism Foundation in London for making these lectures possible. The foundation provides significant support for two master's programs, the Business and Economic Reporting program here at NYU and the Financial Journalism program at City University of London. I want to welcome students and faculty from both programs, as well as many of our alumni and other guests. I would like to add a quick word about Marjorie Dean, a name you've heard several times already, and a significant figure in financial journalism. Marjorie Dean joined the Economist newspaper in 1947 as head of statistics when it was very difficult for women to enter journalism as reporters, but she never put her dream aside. By 1966, she had become deputy business editor and later the finance editor. She continued it until her retirement at the age of 75 in 1989. No less than Fed Chairman Paul Volcker described her as, quote, a pathbreaker for female financial journalists, end quote. She endowed the foundation to help improve financial journalism. She wanted to help journalists to attain excellence in their skills and also a deep knowledge in the complex issues they were covering. That way, they could inform the public about the economic and financial issues that drive some of the world's most important stories. She's an inspiring role model, and we are true to her legacy with the distinguished speakers we invite for the Marjorie Dean Lecture. Now it's my honor to introduce one of those speakers for today, Mehrsa Baradaran, Professor of Law at the University of California, Irvine. Professor Baradaran is one of the leading experts on the racial wealth gap, and she writes extensively about banking law and inequality. She's the author of How the Other Half Banks and The Color of Money, Black Banks and the Racial Wealth Gap, which was awarded Best Book of the Year by the Urban Affairs Association. Professor Baradaran's scholarship and commentary have also been published extensively in law reviews, as well as in the New York Times, the Wall Street Journal, the Atlantic, American Banker, the Financial Times, and she also contributed to the 1619 Project at the New York Times. Beyond her publications, she has testified before the United States Congress and has spoken at forums such as the World Bank. And it's wonderful to add that with this lecture, she returns to her alma mater, as she earned a law degree from NYU. I'm delighted to welcome Professor Baradaran to give our Marjorie Dean Lecture today. When she has finished her presentation, she'll take some of your questions. Just one more thing. Please keep your cameras on during the presentation today. We could not hold this lecture in person, of course, but it would be very helpful if the professor could see the many faces in our group. Professor Baradaran, please go ahead.
Thank you. Thank you so much for the invitation. And just to note, as I was collecting the resources and documents to write this book, I relied heavily on Black independent journalists over the historical time that I'm covering, where a lot of the white mainstream press was not writing about these banks, or when they were writing about the issues I wanted to cover, it felt very skewed. And W.E.B. Du Bois, his support of newspapers and his own journalism was really pivotal for getting actually the documents out there. And Maggie Walker, who I'll talk about also, she's a first female banker who's African-American, also had a newspaper. So I think there are many books on the Black press that I relied on for this book. So thank you for that. I am going to can you see my password here? Slides? Yes.
Looks good. We can see.
Okay, great. Okay. So the book is basically a history of the racial wealth gap and the role of credit policies, economic theories, and banks in creating and perpetuating it. And to explore, first of all, why the wealth gap increases the higher up in income a family goes. So, college educated or law degree holding or medical school degree holding families, Black, white, that gap is much wider than it is at the lower income. So it really is disconnected totally from income and education. And there's also the fact that it hasn't abated much over time. So the share of Black wealth compared to total wealth, which was essentially white at the time, post Civil War 1865 was 0.5%. Today, that's about at the most 2%. So to say that our public policy efforts to eradicate the wealth gap have been a total failure is an understatement. And it is the myths that we tell about markets that present the biggest obstacles in closing the racial wealth gap and achieving economic justice. For example, the promise of free market capitalism is that it does not discriminate. Free markets offer equal opportunity for all to trade and prosper based on one's skill and ability to produce. Yet history reveals that in fact, markets do discriminate, or alternatively, that the American economy has never borne any resemblance to a free market. For most of our history, Black men and women have been excluded from occupations, schools, neighborhoods, and trades. And their property and their contract rights, which are the two basic foundations of free market or capitalism, were not protected by the law. In other words, if you cannot enforce a contract, if you cannot enforce a property right, you are not able to participate meaningfully in capitalism. That's the one side of it. The second part is that in each historical moment, when sort of wide-scale middle class, so definitions abound, but let's say not the ultra wealthy or the sort of destitute, when wealth was being created for the middle class, so through the Homestead Acts, through the post-Reconstruction Southern plantation divisions, through FHA mortgage credit, through GI Bills, Black communities were shut out of these programs, not accidentally, not incidentally, specifically and purposefully shut out, so that so that they could subsidize the provisions to the white property owners. And then there's a third aspect, which we'll talk about as we go to two historical moments, Reconstruction and civil rights, that specifically when there were these pivotal moments in history where Black communities were demanding state intervention and capital to remedy past injustice, the rhetoric of free market capitalism is used as a weapon against these claims. And so in each of those moments, instead of real reform, the Black community is offered a self-help market of segregated banks and businesses. In other words, leaders upholding the dominance of the white market institutions promise that the free market will fix the problems that had been created by law and backed by state violence. So first is during Reconstruction. During Reconstruction, during the Civil War, the things I did for the 1619 project was in the capitalism essay. I have 3 or 4 different essays in the initial magazine of the 1619, and one of them was about the Confederate currency. The currency of the South was built on enslavement, not just that labor, the labor that was extracted from enslaved people, but the capital accrued based on holdings, men and women. So these holdings, if a plantation owner had, a certain amount of enslaved humans, they would use that as collateral, a security to get more loans, to purchase other sorts of property. And so really the Civil War was a marked difference between two different currencies. So one of the bigger battles that gets less covered during the Civil War is the South, issuing its own Confederate currency, and some other countries sort of having to wager which currency would win the war. And eventually it was the Lincoln greenback. We call it the US dollar now. We did not have what's called fiat currency at that time. And the South's currency was literally, emblematic of the economy upon which it was based, which was enslavement. And so the Union didn't just win on the, the battlefield, but they also won the right to print money and back it by the full faith and credit of the new U.S. Treasury, or the Union's Treasury. So during Reconstruction, then the Southern economy was being shifted around, and freedmen were, of course, expected to make the transition from being capital, literally, to participating in capitalism. And freedmen and their abolitionist allies demanded land as a form of reparations. And of course, as a punishment for treasonous Confederates. That was the conversation. How do we punish these people who had waged a war against the country, and what was the consequence of this? And the other sort of meaningful distinction. This is Frederick Douglass and several of the Republicans were very clear that if without land, the gains, freedom was not guaranteed. In fact, it would be meaningless to participate in any sort of free economic structure in the South without land. But as we all know, that did not happen. President Andrew Johnson vetoed the land grant and the Freedmen's Bill, except for one provision, which I'll get back to. And he reasoned that the freedmen would be protected by the free market and contract law. So this was the first time in his veto, he very much talks about, oh, look, you'll just bargain for fair wages. You can sign contracts. And they would buy their own land. This was either unbelievably naive or incredibly cynical. More likely the latter. The Southern economy was nothing like a free market. White men refused to sell property to Black men. Southern legislators, lawyers, and judges drafted laws governing every aspect of Black labor. They restricted Black men and women from skilled trade. Vagrancy laws were prevalent. Wages were capped by law and by cabal between employers, and any violation led to convict labor without due process, where you would go and work in the mines until you died. By the end of the Reconstruction era, most freedmen were left landless, voteless, and with practically every profession blocked to them. Their only choice was to grow cotton. Of course, that was the entire point. The worldwide cotton market was heavily dependent on cheap and abundant cotton from the United States. Okay, we talk about supply chains, we talk about global trade. The major flow of global trade at the time was cotton from the South into Liverpool through to India. This was the engine of the worldwide economy. And there was widespread fear that if the cotton output lowered, that the price would soar. That's how supply and demand works. And if the price soared, that would stall these markets and lots of people would lose their money. And the reason to think that the price would soar if this happened is because they were the sort of the former Confederates and the Union were watching what happened in Haiti. In Haiti, after the freedmen there earned their freedom, they took the land. And they refused to grow sugar as a primary crop. They grew sugar, as a minority on their land, but the majority of the food was subsistence. That's what you do. You grow food for your family. You diversify your holdings because otherwise you are stuck in a debt trap. And the South and the North and the British decided that this was not. This could not happen in the South. And so that is the reason why the land grant was taken away. If they had been given the 40 acres and a mule, cotton prices would have skyrocketed, and the market could not have that. In the meantime, so it wasn't some laissez-faire free market ideology that halted the grant of the land, because in the meantime, the federal government was actively providing free land to private railroad development and to white families through the Homestead Act. Black men were denied land, not because the government was constrained by Adam Smith's free market, but because, as Andrew Johnson explained, America was and should remain, and I quote, a white man's government. And the white man's government that had control of capital and land earned it or got that control by control of lawmaking. And if you don't code Black property as property, then it's impossible to build that wealth going forward. So instead of getting land, the freedmen got freedmen and women, use men as the sort of term of art at the time, got the Freedman Savings Bank. And this is the first time that sort of self-help and banking is used as a decoy. So, these are the Union generals, the good guys of the war. Union General Oliver Otis Howard, had to go take back the 40 acres that some Black communities were granted, and explained, look, that the bank was better anyway, because it would teach them about thrift and savings, that freedmen should, quote, earn land and not receive it as a gift. So the Freedmen Savings Bank was the only tangible creation of the Reconstruction era Freedmen's Bureau that outlasted Johnson's veto. No bank before or since has resembled the Freedmen's Bank. It was created by Congress. It was signed into law by Lincoln with a special charter. We didn't have a Federal Reserve. And the bank was, as you see, immediately successful for the time. There weren't banks like this around. There weren't big banks where everyone could just deposit their money. It was embraced by the freedmen. And the main reason it is because they trusted that the notes of the bank had the backing of the federal government. Why did they trust it? Because there was a propaganda regime, and the notes and bills of the bank itself had the pictures of Sherman, Grant, and Lincoln on them. And so it gave the sort of hint that the Treasury was backing these notes, which was a really crucial thing at the time. At the time that this bank is created and is operating, a bank's notes were worth what a bank's reputation was worth. So if you had $100 note from, say, some podunk bank in Michigan, you would discount it because the bank might not be there when you wanted to redeem that $100 note. If you had a $100 note from JP Morgan, you would trust it because JP Morgan likely had the money, although not always, because there were constant runs. So giving people the impression that this bank was protected and chartered by the Congress, which it was, allowed so much money to come into this bank. But it wasn't. It was not backed by the full faith and credit of the government. It was supposed to be a glorified piggy bank. It was never meant to be wealth building. It gave no loans, but Congress did try to keep the deposits safe at least. But the capital grew to what today would be about $1.5 billion. It was too much money for the white managers to resist. And you can imagine the subprime speculation of the 2008. Right now, let's say NFTs or crypto is a very hot market. At the time, it was railroad bonds. And the president of this bank, Henry Cook, his infamous Wall Street brother was Jay Cook, and he took the deposits and looted the bank. He used the money to speculate on railroad bonds and lost half of the deposits. As W.E.B. Du Bois says in Black Reconstruction, not even 10 additional years of slavery could have done so much to throttle the thrift of the freedmen as the mismanagement and bankruptcy of the Freedmen's Bank, chartered by the nation for their special aid. The failure of the Freedmen's Bank cannot be underestimated on the future trajectory of banking and institutional trust by the Black community. I was reading interviews into the 80s, 1980s, 1970s. This was not that long ago. The bank failed in 1880. And a lot of people were rightfully distrustful. This was supposed to be a bank for them. It was supposed to be, a charitable sort of nonprofit, and it was a scam. And so this became a widespread sort of acknowledgement of distrust. And some of the trends you see today in unbanked and underbanked. I started this project after I finished my first book talking about the unbanked and underbanked, and noted the vast disparities in unbanked and underbanked populations between races. So for white families, it's about 11% of people are underbanked or don't trust banks or don't have access to them. For Black communities, especially in the southeastern rural areas, it was up to 70%. And the number one reason was this distrust of institutions. And it's not just this bank. It was repeated sort of exploitation over the years. But many people, having been passed down the history of the Freedmen's Bank, really kind of felt this as a a blow to their faith. And it wasn't just this bank. It was that at the time that this bank failed, the South had violently overthrown Reconstruction. The rights that were promised in the 13th, 14th Amendment to vote, equal process, equal protection, due process were eradicated. Not only that, the Supreme Court had used the 14th Amendment to protect corporations against state control more times than they had ever protected Black men and women against the hostile arm of the Southern legislature, which was what it was intended to do. 10 years after slavery had ended, the Supreme Court Chief Justice in a case on the Civil Rights Amendment said, look, we don't need this anymore, that it's time for Black men and women to stop being treated as a special favorite of the law and to kind of go out on their own. So you already see this backlash and this idea of reverse racism happening, even as Black men are being routinely lynched for crimes such as, for example, owning property. Okay, so then you have a slate of banks that are produced in the wake of this turn toward hostility in the South. So this is one of the first Black-owned banks, and she's the first. This is Maggie Walker. She's the first woman of any race to own a bank. Hers was a St. Luke's Penny Savings Bank in Richmond, Virginia. She also had a newspaper. Like I said, she had a college savings fund. She ran a bunch of different sort of self-help, they called it at the time, societies in Richmond that were usually connected to a church or a secret society, which was essentially a social club. There was heavy segregation and hostility. You couldn't put your deposits at a white-owned bank if you were a Black businessman because they would maybe sometimes call the Klan, and once they knew that you had property, and it would be taken away. And so a lot of the banks around this time resembled Maggie Walker's bank. Hers is particularly special, not because of her gender, but because she was a brilliant banker. She was the first Black banker conducted into the Virginia Bankers Association. During the Great Depression, when banks were failing across the board, she had so much liquidity and such a great system of risk management that she saved all the other Black banks that she was able to save during that time, and also some other white banks. So she was a brilliant person and a brilliant banker as well. Then, of course, there's the Great Migration and the sort of mass sort of push and pull. The pull of the North being toward the sort of industrial North, lots of jobs, and the push of the South. There is a cotton recession and that obviously Klan, Jim Crow, all of the indignities of the South. But when the northern population, when the migrants reached the North, there was heavy segregation, housing segregation at the time. And so the book, it tracks Black-owned banks. And this is, this is where I said that I've used a lot of Black journalists who profile these bankers. At the time, these were, big sort of populated city centers in places like South Chicago, Harlem, Detroit, Baltimore, in the West near LA, and very concentrated Black populations. And the concentration was due to very strict segregation lines. And this was the golden era of Black-owned banks because of the heavy segregation and because these blocks were turning over quickly, and they were very much affected by the forces of migration and segregation. That the real estate market that was created was this very fast-moving, very onerous market where there's a joke that integration is the month between when the first Black family moves into a block and the last white family leaves. Okay, so there was a real antagonism from white communities, and these were usually immigrant communities or lower income white communities. And a Black community would come in, would get segregated into an area, and block by block they would buy homes into these areas. And then as soon as the area tipped, and a white economist at the time said that it was around 4 or 5 Black families would tip an area. What this meant for Black buyers and Black bankers. So Jesse Binga was a real estate broker. He had 2 banks, one of the most successful bankers and businessmen at the time in Chicago. So the first Black families would buy a house in an area and they would pay 30% over asking price. And then upon buying, they would be attacked by mobs with guns, with fire bombs, with lynching threats. And this is in the North, right? And many of the people expected this. So Dr. Ocean Sweet, who bought a place in Chicago, he was used his Second Amendment right to protect his property, and so the NAACP came to his house to protect the property at night when the sort of mob of violent would-be sort of harassers, terrorists came, and they shot into the crowd as they were being firebombed, and he actually got prosecuted for murder, but Clarence Darrow came to his defense, and he got did not go to prison. Jesse Binga's house got bombed 10 times, and he kept buying in a nice area. And so this was the kind of violence that Black property owners routinely faced. And I talk in this era about the structure of Black-owned banks and how impossible it was for them to build wealth, even the most brilliant bankers like Jesse Binga, because they could take deposits from Black depositors, and they could lend out on Black properties, but they couldn't do the money-making magic of banks, because while you can segregate people and you can segregate housing, you can't segregate the money. And insofar as you were starting with white property owners and Black buyers, that money was always escaping into the white banking institutions, and it was never coming back. In places like New York, the white banks, Chase Manhattan being the most prominent, refused to allow any Black banks to be chartered because they sat on the state chartering board. So in Harlem, one of the most vibrant, wealthy, or at least thriving Black communities, there was no Black bank at all until John Rockefeller's son decided to open one. So it was a real kind of corrupt institution. Chase was taking deposits from Harlem and lending them downtown. And if you know about finance, it is loans are money creating, deposits aren't. They're liabilities for banks. But they could take the deposits and give the loans to businessmen downtown. Okay, so I'll fast go through the rest of this. So the New Deal, redoes a lot of things, but it really, really restructures U.S. banking. Between 1933 and 1970, hundreds of thousands of small community banks, credit unions, and thrifts are being formed. They are safe and stable and profitable. And the reason that these banks are thriving is because the New Deal essentially took the risk out of banking, period. The deposits are now insured by FDIC insurance, so no more bank runs of the kind that threatened banking from the beginning. And the loans are, more importantly, subsidized by the FHA, the GI Bill, the farm loan programs, and sold into a secondary market through Fannie Mae. So this built the middle class. It wasn't as though loans were for middle class borrowers. I think people mistake this when they talk about the New Deal a lot. Because they got the mortgage, they became middle class. The loans created the middle class because they created the suburb, and they created generations of homeowners. It was all white men. It was built on the Fordist family wage, where the man got the job and the mortgage, and the woman stayed home to take care of the children, and Black men and women, immigrants, migrants of any kind, were not included in these mortgages, except for some of the older immigrant communities that were. And so this is where you see how policy really shifts the racial makeup of, even segregation back from the tenement living. So you have two workers in the city. Let's say one is Italian, one is Black, and they're paying both $50 for an apartment in a tenement in Manhattan. With the FHA and post-war, Italians were included for the most part in the FHA loans, as were German immigrants, Polish immigrants, Jewish immigrants, others who had been discriminated against. And of course, there are different strands of anti-Semitism that are apart from this, but we're just talking about the FHA at this point. These groups that were kind of earning the same and paying that $50 for rent are now able to pay. If you have the FHA loan, now you're paying $35 for a mortgage. It's 30-year fixed rate. This was the first time you could buy a 30-year fixed rate mortgage. And it meant that you got to, build equity in a home, and that the whole infrastructure of the state is now transformed by the suburbs. So now there's, car traffic, there's the commercial loans of the era. And you can see this in the fate of Italian immigrants, particularly, because I follow in the book the fate as parallel of Bank of Italy. Bank of Italy, just like the Jesse Bingo's bank or any of the Black-owned banks, is a San Francisco bank for Italian immigrants because they're also not getting loans from the major banks. But with the FHA mortgage, GI, and GI Bill, and the consumer loans, Italian Americans were able to participate. And so Bank of Italy is also thriving. It becomes Bank of California over a decade. And today, Bank of Italy is Bank of America. It, sort of merged and finally kind of took over, now owns every bank. So it really kind of emblematic of what happened. Black men and women did not get these loans. You've heard of redlining, likely, and this was a Chicago map, and the HOLC map makers went around every neighborhood, and before there were FICO scores, before there were risk scores, they looked at the racial makeup of a neighborhood, and they used that as the number one thing. Wherever you live right now, you can look in Manhattan. Manhattan's complicated because there's so many of these, but any other city, and you can see the exact maps and the exact profiles that each map maker used to identify each district. So this is one for Atlanta. And I use this because this, you see on the top here of this little map, D17, best Negro section in Atlanta. Okay, and so this is where Morehouse and Spelman, where Atlanta University was, and the note itself. So this is the HOLC risk profiler. They note that this is where you look at inhabitants of the neighborhood. It says Negro business and professional men, clerical workers. So that's high, and the fact that these are single family homes, right? So if you look at type of building, single family, 90%, that is a very preferable and desired thing. But so if you look at the occupation, foreign born families, 0. Negro, yes, 100%. Infiltration of, how close are these other races from infiltrating the neighborhood? None. Relief families, few. And so this is a redlined area. Even though it is single family owned, it's businessmen, because they're Black, then this neighborhood is deemed to be risky, which means that they cannot get a mortgage. No one in this neighborhood can get an FHA insured mortgage until 1970. What that means is they have to go to the private market to get a mortgage. 98% of mortgage loans from 1934 until the 1970s were given with FHA backing, early 70s. So this meant that you essentially had to pay 10 times more, essentially, in interest and in loans. And what ended up happening, actually, is that people in these neighborhoods were not sold mortgages at all, but they were sold contract sales, which were the opposite of a mortgage. They were basically glorified rent. You're paying like it is a mortgage. You don't get the deed, the first default, and you're done. So the mobs and the signs sort of shifted to laws. And from 1930 until 1968, when these were no longer enforceable, every home had a racial covenant. So if you see, this is a classic one, and I mean every home. It was malpractice for a lawyer in a deed not to include these. And these were covenants, which meant that they ran with the land. You could not contract your way out of it. This stayed, right? It's once you sold the land, this covenant stayed. And so you see, it says, shall anytime be sold, conveyed, rented, leased, in whole or in part, to any person or persons not of the white or Caucasian race. No person other than the white or Caucasian race shall be permitted to occupy any property So these are two other ones. Said real estate is conveyed subject to the condition that the same shall not be sold nor rented to other than respectable white people. That said lot shall not be leased or sold to any person not of the Caucasian race. And what you saw, this was basically mandatory because it wasn't just about racism and the deeply eugenic basis that upon which zoning is made. So that back to that the infiltration of and the foreign-born families. The idea at the time was that there was this BS pseudoscience of racial evolution. This is the pseudo-Darwinian stuff that incidentally the Nazis used in their in justifying the Holocaust, which was that you had a racial evolution and you had white Protestant people at the top, and then even the Irish were lower down the evolutionary scale, and then there was you came down and you had Mongolians or people like me were way down here, not quite evolved, and black people were lower than that. And this was taken so seriously that people believed that even being close or proximate to other races would harm their children. Okay, so this is how zoning is justified legally. Okay, so when there are two different strands of the racial justice movement. I mean, it is a false thing to say, look, it suddenly happened. The racial justice movement began when the first slave ship landed in American shores. It was just that in the 1960s, some people started paying attention. Post-World War II, there's a lot going on. It became a national security issue. And there's a lot I won't go into, but both sort of what is perceived to be sides of the movement were pushing for economic justice. So if you look at, I'm going to try to play this. I said that I wouldn't, but can you hear this?
In a sense, we've come to our...
Can someone say yes or no? Can you hear it?
Yes, we can hear it.
Okay. Just note the sort of transactional banking language that Dr. King uses. He was on a board of a Black-owned bank, and his wife, Coretta Scott King, was a bank employee at the time. And he's using it metaphorically, but just kind of note it.
Nation's capital to cash a check. When the architects of our republic wrote the magnificent words of the Constitution and the Declaration of Independence, they were signing a promissory note to which every American was to fall heir. This note was a promise that all men, yes, black men as well as white men, would be guaranteed the unalienable rights of life, liberty, and the pursuit of happiness. It is obvious today that America has defaulted on this promissory note insofar as her citizens of color are concerned. Instead of honoring this sacred obligation, America has given the Negro people a bad check, a check which has come back marked insufficient funds. But we refuse to believe that the Bank of Justice is bankrupt. We refuse to believe that there are insufficient funds in the great vaults of opportunity of this nation. So we've come to cash this check, a check that will give us upon demand the riches of freedom and the security of justice.
So there are the words right there. So he was, of course, talking metaphorically about justice as not having not been given to the black community, but also King's mission, as was the black nationalist mission and the black separatist mission, and all sorts of justice movements, was for justice as economic redress. King and others noted the radical disparities in prices that they were being charged for goods. So aside from the two different mortgage economies, there were also consumer loans that were proliferating during this time, and people in the Black what they called them as ghettos at the time, because they were they were mandatory segregated places, were paying 10 times more for goods as were white communities, because the white communities now had the credit card. It was revolving credit. It was capped by law. And in Black communities, there were installment lenders. And so the frustration of Malcolm X's movement, King's movement, was built on this recognition of that and King talks about this. Look, segregation isn't about keeping people apart. It is economic oppression. And that was his movement's aim. He started out his movement in the 1950s to create credit unions, Black banks, to coordinate funds, as did Malcolm X, to coordinate and to push on these levers as a boycott of these white institutions that refused to lend to Black communities. And then this is his last speech before he is assassinated in Memphis, which is take your money out of the banks downtown. We need a bank-in movement. He came to support striking sanitation workers. So, from the beginning to the end of his movement, it was about economic justice. And he felt, as did many of the principles of the civil rights movement, including Lyndon Johnson, that they had just begun the reforms by passing the Civil Rights Act and the Voting Rights Act. And that's because the Civil Rights Act and the Voting Rights Act, though monumental, and though they were very difficult to pass through that Southern Senate, were just a repeat of the 13th, 14th, and 15th Amendment. They were just a guarantee of rights that Black men and women were owed starting in 1865. And so everyone recognized that more was required. But of course, this was the sort of protest broke out, lots of targeting of lenders and loans during this time. And President Nixon, of course, won the election in 1968. It was a really pivotal election where we could have gone two ways. And what Nixon does is he co-opts the language of the Black Power movement and hinges his campaign. He says, yes, we want Black Power. And we want it through Black capitalism. So I'm going to play this again. If someone can just tell me if they can hear this.
Richard Nixon speaks on Black capitalism.
Can you hear?
Yes,
Okay.
we can hear.
It's no longer enough that white-owned enterprises employ greater number of Negroes, whether as laborers or middle management personnel. This is needed, but it has to be accompanied by an expansion of Black ownership, of Black capitalism. We need more Black employers, more Black businesses. Integration must come, but in order for it to come on a sound and equal basis, the Black community has to be built from within, even as the old barriers between Black and white are dismantled from without. We have to get private enterprise into the ghetto, but at the same time, we have to get the people of the ghetto into private enterprise as workers, as managers, as owners. These past few years have been a long night of the American spirit. It's time we let in the sun. It's time to move past the old civil rights and to bridge the gap between freedom and dignity, between promise and fulfillment.
The preceding pre-recorded political announcement was paid for by the Michigan-Nixon Agnew Committee.
The national mood had so changed between 1964 and 1966 that Roger Wilkins of the NAACP says that it would have been hard to pass the Emancipation Proclamation in the atmosphere right now. So Nixon was very much a president of backlash, but he knew that he could not, like Johnson, like Andrew Johnson had said, that this is a white man's government. But he did convey that message. And so once again, using the rhetoric of capitalism to halt the progress of the civil rights movement in the economic justice division. There's a really interesting tension here that I cover in the book in chapter 6 between his HUD official, George Romney, who is a zealot about housing discrimination in a good way. He had tried to integrate some neighborhoods in Michigan and saw firsthand the ferocious sort of anger of the white community when Black people tried to move in and tried to convince Nixon that integration or housing, some sort of housing grant was justified, and Nixon sent him off to Mexico and really halted the progress here, and using the language of Black capitalism, and kind of talking about quote unquote ghetto enterprise, and that language evolved over time to enterprise zones, Black-owned businesses. Clinton talked about community empowerment. We need, the truth is America can't get very far with a dependent or helpless. So Clinton's, now it's going to start to get closer home. Clinton's HUD official is Andrew Cuomo, who starts a community enterprise program, community enterprise zones. And enterprise zones, of course, rhymes with opportunity zones. It's essentially the same structure that he started the CDFI fund, which was well-meaning, but very much leaning on capitalism to fix the problems that law and policy had created. There's Chuck Schumer in the back, and if you can see him. Clinton talking about South Shore Bank. I won't play this video clip, but really talked about microloans and how, capitalism and credit will fix these problems. Obama, to his credit, didn't do all that much here to reify the Black business, and Trump, of course, the Opportunity Zones program was his major quote unquote deal with Black America. It was basically from the Nixonian playbook. And so to end, I will quote W.E. Du Bois, who, to get any justice, we have to, this is not Du Bois, this is me. We must shed these destructive myths that capitalism will fix what public policy, law, and state sort of bureaucracy created. We can't deflect the responsibility of fixing economic inequality into the communities that didn't create the problem themselves. So W.E.B. Du Bois declared in 1948 that the great problem of American democracy was that it had not yet been tried. So I think it's probably time we try, and I'm open to questions at this point. I'm sorry for going over a lot. I'm sorry.
No, that was fascinating. Thank you so much. And I think what we're going to do, some students from NYU's Business and Economic Reporting program have prepared some questions that they'd like to ask you, and then we'll move to, if we have time, to questions from other people in the audience. So if anybody has a question they'd like to pose, please put it in chat, and we'll try to get to it. So I want to ask first Erica Carnevale to come on screen and ask Professor Baradaran your question.
Hi, Professor Baradon. My name is Erica. I'm a student in the Business Economic Reporting Program at NYU. First of all, thank you so much for the lecture. It was so enlightening. I wasn't aware at all of this topic. I'm from Brazil, and I'm still getting familiar with American history, and I really thought your book was so interesting, brought into discussion an important topic. My question to you is on digital currency. Actually, like many other central banks, the Fed started discussing the possibility of creating a digital dollar. I think just last week they released a study on it. And a few Democrats believe that one of the assets of that would be the inclusion of the unbanked. Do you believe that new technologies like that one, and combined with fintech services such as digital wallets, can serve as platforms to include the unbanked or the underbanked into the financial system in the US?
Yes. Okay. So thank you for this. This is a very nuanced answer. My first book and most of my articles actually engage with this topic. So I think there's a difference between just digital currencies in the private market and CBT, the central bank digital currency, which I think would be a state-backed currency, and that would be beneficial. So I'm a pro that, but we need to close up some tracks before that's the answer for the unbanked. It's an answer for some things, but to get to the unbanked, the major problems with the unbanked populations in America right now are the that most are in areas without broadband, without access to mobile banking. A lot of Native American communities, rural communities in the Southeast and Southwest. And for those communities, they still need to have to operate in cash. And so to cross that cash digital divide, there's also lots of laws and policies in the US that we have on identification for, these are post 9/11 laws that we have imposed where you cannot actually transact money. We want to slow that. We as in policymakers have decided that they'd rather slow that down than have terrorist funding or immigrants kind of having that sort of identification. So these are policy decisions that need to be addressed before any digital currency or digital wallet can bank the unbanked. In other countries where either you're going from, Kenya with M-Pesa, you have one mobile provider, 80% of the population is unbanked, and one central bank. You can really kind of like go from 0 to 100 quickly. And Brazil also, but Brazil is a very interesting model because for rural regions, they have done postal banking as a private public partnership. And so my first book, I kind of go through all of these options, and I had suggested postal banking. This is a 2014 book, and I was very, very lucky that it got picked up in policy. And so I have been working with, Senators Warren, Sanders, Gillibrand, President Biden on putting it in action. It's still not there. But the idea with postal banking would be you would have that brick and mortar, and then any of the all of the digital stuff would be there. You would just have a place to take your paycheck and go and put it in. And it would be a post office because the post office still exists in those communities. Broadband is something that is also vital. We need to get broadband access and digital mobile phones and laptops to these communities. We saw this during COVID, where so many children that were not in school didn't have access to computers at home. And so that's something that is crucial public policy intervention.
Great, thank you. Lisa Renau.
Yes, thank you very much. My name is Lisa Renau. I'm also a business and economic reporting student at NYU, like Erica. And Marissa, thank you so much. I really admire your work, and it really encouraged me to think about the whole topic more broadly. And me personally, coming from Germany and having grown up in Europe, I was wondering, in your eyes, is the racial wealth gap a US only phenomenon? And if not, how do you see the issue being similar or different in other parts of the world?
Right. So, I mean, look, colonialization and empire, that's not just a US only problem. That was abroad. I'm from the Middle East. I'm an immigrant. So I understand that there are a lot of other dynamics. The book that I'm working on right now kind of brings in some of the global aspects of these inequalities. However, there is a particular, and I am an outsider to America. I, didn't intend to write about Black-owned banks. I intended to write about immigrant-owned banks, but there is a unique racial issue in America that is unlike those dynamics in other countries, and it has been so infused into the law, the way that enslavement was not addressed, the way that the founding documents and the New Deal, every kind of legal intervention we have had this real need to cut out rights for Black men and women, has really affected American law and policy in a way that it might have been, South Africa, Germany's, the Nazi Nuremberg codes, but they used American codes, both for dealing with Native Americans and with Black Americans, to draft the Nuremberg codes. So there really was a distinct issue here, and both strands of it, right? There was the MLK, Frederick Douglass, real radical Republican strand, and then there had been this institution built on enslavement that certainly affected the very concept of freedom. And so I do think it's unique in the U.S. And yet, of course, racism and racial oppression is not unique. I mean, Brazil has interesting issues. Germany, I think, is actually a model for addressing, and it's obviously not addressed, but the Nuremberg trials, and just as in South Africa, I mean, these are not perfect illustrations, but the Truth and Reconciliation process in South Africa and the Nuremberg trials, we have never done that. We've never done it with enslavement. We've never done it with redlining. It's sort of you stop a thing and then you pretend it didn't happen, which is why you have these vociferous backlash events in America, where you don't have Nazis marching in the streets, 5 years after the Nuremberg Code. You just don't. There is a recognition that we are not going to engage in Nazi paraphernalia anymore. And reading Germany history, it just was a very conscious thing. And in America, you have a civil war fought, and within 7 years, the Confederacy is back and doing the same tricks, and the North sort of walking away from it, right? You have the same thing with Nixon. You have the civil rights, and then immediately this vociferous backlash. I mean, the fact that I was in New York, driving to Buffalo a month ago for a talk, and there were Confederate flags flying around in the Buffalo neighborhoods. And I grew up in New York, and I would go upstate a lot, and I've never seen a Confederate flag in upstate New York. And there they were, and so that is a specific thing. And I don't know if, certainly white supremacy is coming back in Germany as well. I know that this is a worldwide phenomenon, but there is a certain flavor when you start reviving these symbols of the South again. And it really goes to the unaddressed nature of our racial mythologies.
Thank you so much for elaborating on that.
Yep.
Thank you. Jasleen Chola.
Hi, thank you so much for being here. Echoing Erica and Lisa's statements, we're all super thankful for your time today. So I have kind of two questions, so apologies if it's a little bit long, but I listened to your interview in the Three Things podcast, and you mentioned predatory clauses in contracts, and that stood out to me because I had an experience with my mother-in-law and my father-in-law where when they first moved to this country, they had opened a GNC franchise, which if anyone doesn't know, they sell vitamins and supplements, and they had like 4 or 5. And then one of the locations, there was a corporate one that they opened. And so that location defaulted, but then the GNC was allowed to take all of their franchises that they own. And it was similar to that story that you told. So I was wondering if there are any commonly used predatory clauses that still exist today that we as journalists should be aware of for, vulnerable communities that might not have attorneys to, read their legal documents.
Oh gosh, yes, lots. I mean, we're in a different world of contracts. I teach contracts law now, and every year I have to update new predatory clauses. And predatory is a hard word, because is it predatory if it's in a clause, if you know about it? And I think this is part of what the consumer protection movement elides a little bit, is as long as you are disclosed that this clause is in there, how could it be predatory, right? But of course it is if it's onerous. And I think right now we talk about click wrap or browse wrap. So right now, if you look at the accept cookies or any website, I agree. And what you get in those clauses are you lose your right to a jury trial. You lose your right to a class action. You have mandatory arbitration clauses. And this is something that, besides the crazy stuff that the Supreme Court, the right-wing Supreme Court has done with abortion rights and other sort of deprivation of rights, these are the unseen rights. Is the right to a jury trial has been deprived for most contracts right now, consumer contracts. And this is a very right Supreme Court that happened a couple years ago and has been enforced over time. But these are so commonplace right now. If you look at any of the, go to YouTube, I do with my class with Twitter, YouTube, Facebook, any sort of content provider that you're on, they own your data, they can change the terms, you have mandatory arbitration, they're choosing the jurisdiction, you can't do a class action, which means that if they screw you a little bit, it's not worth it to you to sue, right? So Bank of America, opening accounts for people, each account they were taking $50, right? And the DOJ brought the suit, but how could a bunch of 50 people screwed out of $50 join together and bring a class action? They couldn't, because they had these mandatory clauses, and the Supreme Court has said that that's valid. So right now, in this world of sort of where we're always clicking contracts, where is this consent if we're not reading? No one's reading. There's this understanding that we're not reading, and we're relying on journalists and consumer watchdogs to look at the changes in terms of service. And so this is something that you both zooming out and saying, look, this is this messed up evolution in contracts where you don't get to bargain. And the whole law of contracts is premised on the idea that two people bargain for some standard. And so that's how the court has to treat that provision is, look, it was a result of bargaining. And so we're going to assume that you both did this, right? You both wanted this. And we all know that that's a legal fiction right now. So there's a lot of these things in data, and I think we are relying on government agencies to bring these lawsuits, whether it's the DOJ or the FTC or something, and they're not. So Facebook, I think, is one to watch with the Libra. They tried to do the digital currency. I imagine when they start doing loans, I mean, Amazon and Chase now have a partnership where they're using data for underwriting, and you can imagine that gets tricky. And so what are we signing up to when you go on Amazon and start searching? Then you get targeted for, maybe they know you just went through a divorce or a breakup, and they know that people after a divorce are susceptible to bad, sort of highly risky decisions. I don't know, let's assume that they do. They know a lot of this stuff. Now you get a loan, 30% APR for a new car, and feel good about yourself, blah, blah. Like, these are the kinds of predatory sort of ads that you worry about with credit. I mean, now you see it in all sorts of ways, but there is a danger when we're merging these lending credit underwriting algorithms with these contracts where we're just agreeing to give so much. And I think we're kind of maybe numb to it now, but it's a real problem that our legal institutions, at least the Supreme Court and the federal DC circuit, are choosing not to deal with.
Yeah, I think I saw too, it would take you multiple days to read the Apple terms and conditions. So thank you for that answer. I also had a second part of my question. As an Iranian American, I'm curious, like, if you ever get questions in your own community on maybe why your focus is more on inequality in the Black community, and the reason I ask is because I've gotten those comments during like the Black Lives Matter protests of like, oh, well, why don't you focus more on like your own issues and things that are going on, in our community? And obviously there's a lot of colorism in the Middle East and Southeast Asia.
Yeah, this is a really important question, because I think there is a real conversation that needs to happen in all immigrant communities. I'm a first generation immigrant, so I came to America at the age of 10 and saw immediately we did not come with a lot of money, and so I lived in lower income communities, and a lot of my Iranian peers were very wealthy, and obviously Iran had different substrata, but there is this idea in a lot of communities. I know we're not alone. There are others where and I will say this in harsh ways, but where some people in the community try to get the benefits of white supremacy and think that there aren't victims. And when you say, well, we are, and these will sound familiar to you, we are Persians, we are actually Caucasian because the Caucasus Mountains are right there. We are Aryan, we're not Black, right? So if you look at these racial covenants in those contracts, the racial distinctions in America were people like us bringing suits to say, look, I can buy this house because I am technically Caucasian. Arabs, Indians, Middle Easterners would have to bring their suit and saying, well, it says you can't sell it to a Caucasian person, but I'm like Caucasian, right? And the judges would have to decide. And these went all over the place. And sometimes yes, sometimes no. With Iranians in particular, they could get it until the hostage crisis, and then they were like, you're not white, right? You lose the privileges of it. And I just think that there has to be a recognition that if you're participating in this structure, and that it is a participation in this structure to not fight for justice that looks like racial equity. And if you're not doing that, then you're then you are part of the problem. You are actually, these are not victimless crimes to say, I'm just going to worry about my community and not the other communities. It's the same structure. It's the same thing that we're all stuck in. And you don't get to come out of it. And I think I actually didn't intend to write about Black banks, not because I wasn't interested, but because I thought that it was probably better for a Black scholar to do it. But looking around, I'm the only person of color at the time who was a banking law scholar, period. There were 30 of us in the country, and there weren't any other people of color, let alone any Black banking scholars. And so I kind of decided, look, if I don't do it, it's not going to get done in this time. And I was seeing this policy that was really backwards, and I do it elsewhere. And so I just think it's, and since then it has become clear where I'm able to talk to white community groups and Black community groups that being an outsider actually does have some benefits. I'm not coming to you as a Black person saying, look at the injustice my community has suffered. And I'm also not implicated, in my parents or grandparents weren't, implicated in this slaveholding South. I have no benefit in pushing for reparations. I am not going to get reparations. My family wasn't implicated. My ancestry wasn't. But this is what needs to happen. I'm seeing this as a person on the outside, and I think it behooves us to look at places like that. And I don't speak for the community. I try, where possible, to give voice to the people themselves that were saying it, but also to compare it to these immigrant myths, because I think that's the myth I was going at most in this book. This myth that look at these other immigrants, look at these Asian immigrants, look at these Middle Eastern immigrants, okay? And that argument is used more than any other when Black justice demands come up. Is like, well, what about these other groups? And I wanted to address that head on. This is those other groups. I'm speaking from those other groups who did enjoy the American dream. I came poor and I made it, okay? I did not have the same issues as do my Black peers. I just didn't. And so that's important for us to note. And to, of course, I can only see my hardships. I can't see the headwinds that I had. I can see headwinds. I can't see tailwinds. But there's a lot of privilege in being the immigrant coming up story. And I just choose not to participate in that, because I did get lucky. Even though I had real traumatic stuff happen, I got lucky. So there is something to recognizing that. Thank you for the question, though. It's really important.
Thank you for that.
Thank you. Cole Horton.
Thank you very much. And thank you, Professor, for speaking to us today. I know you mentioned a couple of times about the historical rhetoric of capitalism, and that made me think in the present about the buzzwords ESG and CSR, corporate social responsibility. And so I'm wondering how you think corporate America's recent infatuation with these topics relates to the racial wealth gap, and especially with so many financial institutions and banks talking about being good corporate citizens and investing in the Black community. Can that be a decoy for their role perpetuating the gap in the first place?
Yeah. Okay. So I have lots of thoughts. I mean, I had like the very cynical thought of, look, when Nike decided to put Colin Kaepernick on their ads, and when Black Lives Matter happened and these corporations decided to sort of put that out there, they made a cost benefit decision that this was better for their bottom line than not. Okay, so that there is some hope in there, right? Like there was a time where it was better for Nike to exploit Black employees and not deal with the politics of it, right? So I think there is something to be said. Well, they actually do think that ESG and Black Lives Matter is a benefit to the market, okay? But it's hard not to be cynical and quite angry when you see Jamie Dimon. I mean, I saw during the George Floyd protest, Jamie Dimon was there's a picture of him in front of Chase Bank kneeling, right, with his executive team. And my immediate response is, why don't you go back inside and give people back all those mortgages that they lost during the financial crisis that you profited from, that you never remedied, right? So for JP Morgan Chase, that has this long legacy of exploitation that is very clear and measurable, right? Chase could just do reparations on its own, and it would be like a drop in the bucket of the trillions of dollars that they make every weekend. So nobody needs Jamie Dimon out there kneeling, right? On the other hand, is Congress or the court or the executive able to address these issues, right? So there does seem to be this deep cynicism and distrust of institutions across the board, that I hesitate to poo-poo a sort of corporation who says, well, we have chosen to put this out there. Well, maybe our consumer dollar can do something. I am always skeptical of that, though, because there's always the move of any sort of resistant institution to saying, well, you choose, like it's like climate change. We are not going to fix climate change through everyday recycling and worrying about our carbon output, which we should. We should all stop eating meat and recycle and not do all of this stuff. But really, they need to stop. Shell needs to stop, and the fossil fuel companies need to do more. And all of us could collectively choose. So it's this personal responsibility thing that you're going to make a choice with your dollar, and these corporations are going to listen to the consumers. And that's not how social change tends to work. So no, I don't have hope. I don't think it's cynical. I do think there is a cost benefit being done by the likes of BlackRock. I think that if you look carefully, though, there was a real initial thrust post Black Lives Matter, and I think that's been pulled back a lot. If you look at BlackRock's Larry Fink's latest letter compared to the first one, he got really excited about equity and ESG, and now there's a rolling back because I think shareholders do want returns, and recognizing that that's what companies are for. I think over reliance on their good deeds is a mistake. But of course, if they want to join the movement and stop lobbying, right, for bad things, then we should hold them accountable. Because you can't with one hand be like, oh, we love, Black Lives Matter, and with the other lobby for zoning that increases the homeless population in South San Francisco because you just created a corporate office and you want all the goodies of the state, right? Those don't go together.
Well, thank you. I wish we could just go on and on. This is so fascinating, but we have reached the end. And so I want to thank you, Professor Baradaran, for sharing your insights. And it gave the students an opportunity to read your book and absorb your teachings. And we want to thank you for that. And we want to thank everybody who took time out of their day to come to the event today, and also expressing our appreciation to the trustees of the Marjorie Dean Foundation for supporting the lecture series and other educational programs for business and financial journalists. So be well. Thank you all for coming, and special thanks to Professor Baradaran.
Thank you for having me. This was lovely. This was great.
Yeah.
Thanks.